Hi everyone, John here. Today I want to go through my daily routine, how I find opportunities in the market's swing trading. Taking a quick look at the S&P's 500, we can see that we continue to chart a series of higher highs and higher lows. I'm using the 50, 200 simple moving averages, and the 21 EMA. Next we have NASDAQ, the Qs. The Qs are also looking very strong, a series of higher highs and higher lows. Diamonds continue to chart a series of higher highs and higher lows, staying up above all these moving averages. Russell 2000, we've been charting sideways, but overall it's still charting a series of higher highs and higher lows. Now I'm going to go through the Dow 30, starting with Apple. Apple right now is trading below this 200 moving average on the daily chart. I have some deeper pullbacks right around 177, 178, and those are 167 until Apple can climb up above this 200 moving average and tag one of these potential support areas. I'm not dealing with it. Amgen, we have a pocket potential support right here, right around 279. Now it has broken below, so I'm not going to touch this chart. Amazon is very extended up these levels, so I'm looking for a deeper pullback. We could potentially fill this gap. This gap's right around 159. So this is something I'm looking for. A pullback into a three-price relationship from here, giving me a trigger to go long. Up at these levels, they're just way too extended up to the upside. Do not want to go long. Same thing with American Express, up at these levels, way too extended. I'm not chasing this. Boeing is also trading below this 200 moving average on the daily chart. Now also trading below the 200 moving average on the hourly chart as well. We do have a pocket of potential support right around 200. Now it's about, can we find strength back to the upside and clear up above these moving averages. Caterpillar, we had a nice pocket of potential support currently playing out. This pocket's right around 312. Price pulled back in, currently bouncing back out. This is a great setup. Salesforce, way too extended up these levels. Now at the beginning of this video, we talked about the indices, right? We talked about the S&P's 500s. Now we're looking for strength in these charts, but if they're way too extended, I do not want to be trading them. Cisco, this one is just very lackluster, not finding a lot of strength. So even when you have the NASDAQ trading very high, a series of higher highs and higher lows, it's not following that pattern. What we want to do is find patterns that are similar to the major indices. We have a chart of lower highs and lower lows with this chart. You could build up a case for the downside. You just got to follow through on oil. If you can find a three-price relationship right here, and this chart really starts to break down to the downside, this may be a shorting opportunity. The problem with this chart is that it's also trading above this 200 moving average on the hourly chart. So I do not want to be dealing with this. Disney, very extended up these levels. So you have a gap right here. Currently using that gap, that's a bounce. Now I think I would much rather have it fill this gap right here, 98 and some change from here, looking for a three-price relationship. Dow, something like this I would be more interested in. You can see this is a dividend-paying stock. Now we're finding strength above the 200 moving average, currently bouncing back to the upside. So this is something I would be interested in if you want to hold for the long haul. Goldman, right here, I'm looking for a three-price relationship. So I look for a deeper pullback. We have pullbacks like this, pullbacks. So it may bring us back down to that 200 moving average if it starts pulling back. Home Depot, also very extended up these levels. Do not want to be chasing these highs. Honeywell, I had a pocket of potential support, and right now it's getting really messy. So just don't deal with this chart. Leave it alone. You can see while we're trading above this 200 moving average on the daily chart, we're trading below the 200 moving average on the hourly chart. So that's going to provide this ping pong effect. Price may just zigzag and bounce around these moving averages. We got IBM next. IBM also had a gap up recently, like a deeper pullback. 175, or even filling up this gap, 166. Intel, this one is also getting messy. We had a nice setup here. So over here, it had earnings. So you got stopped out. From here, we're looking for another pocket of potential support. Right now, I haven't mapped that out. Johnson & Johnson. This one's also trading with a series of lower highs and lower lows. So it's not really following what the overall markets are doing. So I'm not going to be dealing with this chart. JP Morgan over here, extended, way too extended to the upside. Coca-Cola, also a little bit messy. You can see that we do have some lower highs and lower lows. So McDonald's on this hourly chart, we may find a nice three-price relationship here. I'm going to use my Fibonacci extensions tool, clicking from that pivot high, pivot low, pivot high. That would be my first price relationship. Over here, this other pullback, also similar in dollar amount. I can use it as potential support. In addition, using my Fib retracements, clicking from this pivot low to pivot high. We also have a 50% retracement. If you want to go long with McDonald's, this may be a good area to go long. This is the pocket of potential support that we're looking at, right around 292. Right? On a 15-minute time frame, we do have a trigger to go long. What you can do here, when market opens, if this chart is still demonstrating strength back to the upside, then consider going long. But you still need to set your stop loss below this pivot low. Okay, so that could be a great setup for you if you want to go long with McDonald's, because it is trading above these moving averages. 3M, so 3M is still trading downwards. It was fighting up against this 200 moving average. So right now, don't touch 3M until they can clear up above this 200 moving average. Merck, way too extended at these levels. Microsoft, also extended, but at the same time, you know how tech can perform. You can find a little bit of pocket of support, and from here, it could take off to another leg, right? So that's up to you to see if you want to use that pocket of support to go long. And it's also using that 200 moving average. Microsoft, not really finding strength above that 200 moving average, so don't deal with it until they can clear up above. Procter & Gamble, it never really tagged my support areas. I was looking at that 153, 154, not tagged it, so I'm not touching this chart. Always follow through on your trading plan. Travelers, way too extended up these levels. Wait for a deeper pullback, that can fill up these gaps. United Healthcare, can't do anything with this. You can see it's not really charting along with the rest of the markets, trading below that 200 moving average. Visa, also very extended up these levels. So look for a deeper pullback. You can get deeper pullbacks, such as ones like this, potential, right? Bring us much further down, 263. Or a shallow pullback, ones like this. Shallow pullback, back down to 272. Verizon, I also like this chart. And for a long time, it was trading with a series of lower highs and lower lows. You can see on this chart now, it's climbing up above with a series of higher highs and higher lows. We do have some pockets of potential support. This is also a dividend-paying stock. On the hourly chart, if you want to go long, you want to make sure price can get up above this 200 moving average on the hourly chart. And lastly, we have Walmart. Walmart, way too extended up these levels. So in summary, when we're swing trading things, we want to take a quick look at what the overall markets is doing. And from here, we're just going through them one at a time to find if there's strength in the markets. If there's strength in the markets, I'm looking at these stocks. I want to find strength in the stock itself. I want to make sure they continue to chart with a series of higher highs and higher lows that are in flow with the market. Now, if some of these stocks, they're oversold. For example, when we're taking a quick look at the Dow, it's been oversold for a long time, and now it's finding strength. Now it's going to start to chart along with the rest of the markets, and that's what I like. I do not like to find charts where they're way too extended. For example, Walmart's way too extended at these levels. You want to find Walmart when it has a pullback against that 200 moving average on the daily chart. At one point, it was finding a lot of weakness in the chart over here. It went through some seasons where it was tough for Walmart, but now it's finding strength once again. But over here, way too extended up these levels. So you're finding the next best, right? What is the next thing that smart money is potentially looking at? They want to be position sizing when nobody's looking at it, finding themselves a boring stock, right? They collect dividends, they can sell cover calls against it, and it's not going to perform something like Nvidia. Nobody really looks at Dow, but something like this may get up into the 65, in the 70s within a couple of months, maybe year and a half, right? So that's what I have for you guys when it comes to swing trading. Thank you so much for watching this video. Let me know what you guys think. Look for hearing from you in the comments. And subscribe to this channel if you haven't done so already. Hi everyone, John here. I recently put together a PDF on Fibonacci trading. You guys can check out the link in the descriptions below. I'll put it in the comments. Have you subscribed to our YouTube channel? We go over setups in cryptocurrencies as well as US equities to help you grow your account. Subscribe now and hit that notification button. We look to hearing from you in the comments area.